Hey, welcome back to the Yukon Project. Today I'm going to tell you about the best personal loan in every situation. You can check the chapters to find your particular situation. And keep in mind though, what you need might fall into a couple of different categories. So watch any section that looks like it could be relevant. We track over 100 national and regional lenders across dozens of different metrics, and we've been doing it for years. We want to share the insights we've gained so you can make the best decision for you. I know it seems like when you need a loan, money is money, but different companies offer different features and benefits that might make it easier for you to get approved, to get the money that you need, or successfully fit the loan into your budget. After all, the last thing you want to do is waste a lot of time applying for a loan that doesn't solve your immediate problem or creates more problems for you down the line. The other thing to keep in mind is that some useful features do not compensate for a much higher interest rate. So when you are looking for a personal loan, you want to look as far and wide as you can. This guide can help you determine how important a specific feature would be for you, but the only way to find a lender that will give you the best possible rate is to apply. At the Yukon Project, we've tried to make looking for that best rate easy. If you go to our lending marketplace page, you can select the purpose of your loan, how much you need, and your credit score category. When you apply to any one of the featured lenders, we will check your rate with up to 40 other lenders behind the scenes. Our partners use a soft credit check, so applying won't hurt your credit. We will show you all of your approved offers so you can be sure to pick the best lender for your situation. It's a great way to get a good idea of what interest rate you should be able to get. All right, let's get into it. When you are looking to consolidate credit card debt or other unsecured debt, the following brands are good options. Every one of these lenders will pay off your other creditors for you when you borrow from them to consolidate your other debts. Not only is this really convenient, it should make it easier for you to get approved with them. That's because they know that the loan will replace your other debts and not just stack on top of them. The new loan won't increase your debt-to-income ratio. However, some of these lenders have other restrictions or charge excessive fees. When you are consolidating your other debt, start with Happy Money. They have a modest origination fee, no other fees, and will likely lend to people with fair credit. All of these lenders will lend at least $50,000. So if you're looking for a substantial unsecured personal loan, you would want to start with one of these brands. Of course, that's a lot of money. And that's too many lenders to apply to every one of them individually. And I'm not sure you would even want to apply to all of them. It's not good enough to know that they will lend a lot of money. The question is whether you would want to borrow from them. Now, none of these companies are bad, to be clear. They are all well-respected lenders. So if you're going to apply to one of them, which one should you start with? If we eliminate the brands that have things like late fees and origination fees, and we emphasize flexibility for particularly long loan terms, the one brand that stands out is Lightstream. This is the best overall brand if you want to borrow a large unsecured loan. But keep in mind, you will likely need good to excellent credit with a high income and low debt to income ratio to be approved. And even then, there is no guarantee that Lightstream will offer you the lowest interest rate. This is why checking your rate with a lot of lenders is a good idea. And you can do that at the Yukon Project. It gives you a clear idea of what rate you should be able to get. All of these lenders will approve people with credit scores that are, shall we say, less than perfect. If your credit score is below 650, it could be challenging to find a lender that will even consider your application. Here is a harsh truth. Any lender that lends to people with credit scores below 600 will have high rates or policies that are not ideal. When you are in this situation, the most important thing you can do is to check with a lot of different lenders to get the best rate you can. You might get rejected from several lenders only to receive a decent offer from another. It will all depend on how your current financial situation aligns with a company's underwriting model. The best in this group is Net Credit because they have lower interest rates than most in this category. They accept a broad range of people and a wide range of loan amounts. But don't just assume that Net Credit will give you the best deal. You can check your rate with up to 40 lenders at the same time at our marketplace page at the Yukon Project, or find another marketplace page. The important thing is to quickly check your rate with a lot of lenders at once, so you can make sure that you're getting the lowest rate you can get. If you can't get approved by any of these lenders, you might be tempted to take a loan from a lender who offers short-term loans with APRs that are over 500%. There are a lot of them out there, and they are all pretty similar to each other, so I'm not presenting a list of them here. If you absolutely need to borrow from them, you should only do so if you can repay the loan in full within 2 or 3 weeks. If there's a good chance that you will not be able to repay the loan that quickly, you probably shouldn't take the loan. Your current need might feel overwhelming right now, but the cost of one of those loans would be so high that it would create additional financial hardship for you in the future. In just a few months, you would have already paid several times over what you borrowed, and you still wouldn't have paid the loan off. That will drain your finances and make you much more susceptible to future financial emergencies. The following lenders offer secured loans. Common collateral includes the title to your motor vehicle, deposits in savings accounts, or even fixtures attached to your home. Generally, I prefer unsecured loans because if you run into additional trouble and have difficulty repaying the loan, the lender can't make your financial life worse by seizing your collateral. However, securing a loan can help you get approved when you otherwise would have been rejected, or it can get you a loan amount that you need, or it can even get you a lower interest rate. That lower rate could make the loan affordable enough for you to be successful in paying it back. Often the best place to start is with a credit union you already bank with. My research suggests that a little over half of credit unions provide secured personal loans, but many of these secure the loan with the savings account or a certificate of deposit. So you kind of need money to borrow money. For the national lenders that offer secured loans, I like the following lenders the most. However, I would start with Upgrade. They have a couple of different discounts, will pay off your other debts for you if you're consolidating, and they have the lowest other fees. If you know that you will definitely be paying the loan off within a couple of months, these are the lenders you should consider. Why? Well, these lenders do not have an origination fee. Of course, the origination fee is always accounted for in your APR, but you won't get reimbursed for the origination fee if you pay the loan off early. That means that having an origination fee will make your loan more expensive than another loan with the exact same APR, but without an origination fee, if you pay the loan off early. Of this group, I would start with PenFed. They offer good service, higher loan amounts, and a competitive APR. In fact, they lowered their lowest APR this year. Of course, the ideal is to go into every loan with a clear plan to pay it off early. Usually that can be done by making a few extra principal payments in the first few months of the loan. If all you're doing is paying a 3-year loan off a few months early, the origination fee probably isn't a big deal. But if you know you can pay the loan off within the first year, the loan without an origination fee would be better. In that case, go with whichever of these lenders will give you the lowest interest rate. You can check that rate with up to 40 lenders at once at the Yukon Project. If you are sick and tired of fees and feel like you are nickeled and dimed to death throughout the life of a loan, these are the lenders you should turn to. None of these lenders charge an origination fee when you sign up for the loan, nor will they charge late fees or NSF fees if you are late on a payment. They make their money on the interest that you pay, and that's all. For people who seem to attract fees like I attract mosquitoes, that can be refreshingly simple. You don't have to worry about any hidden costs of borrowing. You can just focus on making extra payments so you pay less interest. Of these lenders, I would start with US Bank. They don't charge fees, but they also have a microloan option if you are looking for something to cover a small monthly shortfall. These lenders specifically cater to members of the US military and their extended families. If you're in the military or are part of a military family, your situation can feel a little different than the rest of the country. And actually, Congress agrees. The Military Lending Act puts restrictions on lending to members of the military that are more restrictive than for the general population. Congress did not want members of the military to be exploited when their attention is on their mission. That means that people in the military are protected from any loans with interest rates above 36%. But it also means that some lenders are wary of extending credit to military personnel. So you might get more help from a lender who specifically caters to military members and their families. In this case, I would start with Navy Federal. They offer loans as small as $250 and as high as $50,000. They also offer a secured loan and have competitive interest rates. If you're looking for the best overall personal loan for people with good to excellent credit, we must only include lenders that will provide the most competitive APRs, low fees, and reasonable loan amounts. That leaves this group of lenders. If we consider other features like whether they accept cosigners, how quickly you can get approved, how many states they serve in, and whether they charge other fees, we can narrow the list down even further. That gets us down to just Lightstream and SoFi. In the end, I will select SoFi for the simple reason that they will also have the feature of paying off your other creditors for you when you use one of their loans to consolidate other debt. But remember, if you have good to excellent credit, getting approved isn't really going to be your issue. What you want is the lowest APR you can get. Make these companies compete for your business. You can check your rate with up to 40 lenders at once on our marketplace page at the Yukon Project. It's an efficient way to test the waters on what companies would offer you because our lenders use a soft credit check, so applying won't hurt your credit score. We will also show you all of your approved offers, so you can make sure you're getting the best deal you can. Launching home improvement projects can be a good reason to borrow money. These projects can improve the value of your home, protect the value of your home, or just improve your day-to-day life. Home improvement projects take a lot of money though, especially with inflation where it's been. For most circumstances, it's best to take out unsecured personal loans because you don't want to put your collateral at risk. But home improvement loans could be significantly less expensive if you secure the loan with the equity of your home. However, if a lender will not give you a significantly lower interest rate by securing the loan, you should just stick with an unsecured loan. In short, the best personal loan for home improvement projects will be a company that offers you enough money to complete the project at the lowest possible APR while demanding the least collateral. When you are financing your home improvement projects, you should look into home equity lines of credit, home equity loans, mortgage refinancing, and unsecured personal loans. Some banks or credit unions that don't offer traditional personal loans will offer home equity financing, so it might make sense to see what your current bank or credit union would do for you. As for national personal lenders, you should look into these companies. All of these companies offer loans that would be appropriate for home improvement projects. Whether you can get approved will probably depend on your debt-to-income ratio, your income, and your recent credit history. Best Egg would be a good lender to start with because it offers both unsecured and secured options. It will also allow you to stack more than one loan, so you can focus on borrowing the minimum you think you'll need instead of borrowing a cushion. They also provide a discount for homeowners. Fertility treatments and adoptions can be really expensive. Few of us have enough money lying around to be able to fund them up front. While you can use any personal loan to pay for things like fertility treatments and adoption services, there are a few programs that are specifically designed for family planning needs. These organizations provide financing for fertility treatments, and these organizations provide financing for adoptions. Some of these organizations will offer grants, and others will offer 0% interest loans. So you should definitely start with these when you're looking to finance your family planning. The next place you should look is your bank or credit union. Well, there is no guarantee that they will be able to help you. Most banks are no longer offering personal loans, and only half of credit unions will. The following national and regional lenders specifically mention that their loans can be used for family planning. Before you apply, you should determine how much money you are going to need and when you're going to need it. This could help you minimize the amount of money you borrow. You might be able to make room in your monthly budget or win a few grants that can limit how much you have to borrow. If you are clear-eyed about your situation and what your needs are, you will be able to find the lender that is perfect for you. But I think it is important to say that in some circumstances, the best personal loan is the one that you don't take at all. Of course, sometimes you have to borrow money to get out of a jam, improve your life, or seize an opportunity that doesn't come along very often. But other times we might borrow money to avoid a minor inconvenience without recognizing that taking on that debt will cause greater inconvenience in the future. Be smart about whether borrowing money will improve your life in the end or whether it will just make it harder. And don't be afraid to suffer through a tough situation now so you don't have to deal with a worse one later. What do you think? Did we miss any categories or lenders that you think we should have mentioned? We value your comments, especially when they're constructive. The whole community benefits when we pool our knowledge and experience. If you found this information helpful, please like this video and subscribe to our channel. Your support helps us out, and we appreciate it. Thanks for watching.